based on rate sensitive assets and liability, right? So आपके सामने एक केस स्टडी है, आप देख सकते हैं, और ये बार बार एग्जामिनेशन में आता है इस तरह का केस स्टडी। आइए इसको समझते हैं। सो बेसिकली what is in the question that you can see, there are 3 कॉलम। आप यहाँ पे देख सकते हैं कि 3 कॉलम इन्होंने दे रखा है। पहला कॉलम है टाइम बकेट का, द फर्स्ट कॉलम इज फॉर टाइम बकेट, सेकंड कॉलम इज फॉर एसेट, थर्ड 30 days, 31 day to 3 month, 3 to 6 month, 6 to 12 month, 1 to 3 year, 3 to 5 year, over 5 year, and there are some non sensitive. Similarly, these assets are in crore, amount are given in crore, right? So you can see the amount are in crore, like 1 to 30 days assets are 800 crore, liabilities are 1000 crore. Similarly, for each and every time bucket, assets and liability have been given. Now this is the case study, there will be 5 question, 5 क्वेश्चन होंगे इस पे बेस्ड, और बार बार हमको इसी स्लाइड का यूज करना है। होपफुली आपको ये फिगर क्लियरली दिख रहा होगा। इफ इट इज नॉट, लेट मी जूम अ लिटिल बिट। यदि आपको ये नहीं दिख रहा है तो मैं थोड़ा जूम कर दूं। अब आपको उम्मीद है डाटा दिख रहा होगा। आई होप नाउ इट इज क्लियर टू यू। नाउ लेट्स सी द फर्स्ट क्वेश्चन। द फर्स्ट क्वेश्चन इज हाउ मेनी टोटल बकेट्स आर इन देयर ALM। ALM में कितने टोटल बकेट्स होते हैं? वेरी सिंपल क्वेश्चन। ऑप्शन ए 10, ऑप्शन बी 9, sorry, option A 8, option B 9, option C 10, option D 11, right? So first of all, let's recall in ALM, what is ALM? ALM is asset liability management. In ALM, you know, we classify asset and liability into different maturity bucket, right? हम क्या करते हैं, assets और liability को different maturity bucket में classify करते हैं। We classify them into different maturity bucket, right? So how many time buckets are there? If you remember, this is a fact based question. Do you know the answer? आपको पता है कितने टाइम बकेट होते हैं हमारे ALM में, राइट? सो एज यू कैन सी हियर, मैं आपको पीछे ये वाली स्लाइड को देखिए, प्लीज सी दिस स्लाइड। यू सी दिस आर टाइम बकेट, राइट? 1 to 30 days फर्स्ट टाइम बकेट, राइट? 31 to 60 days 3 month second time bucket, 3 to 6 month third time bucket, 6 to 12 months fourth time bucket, and these time bucket are categorized into 3 broad part। तीन ब्रॉड पार्ट में इसको कैटेगराइज किया जाता है। द फर्स्ट इज कॉल्ड शॉर्ट टर्म, मीडियम टर्म एंड लॉन्ग टर्म, राइट? सो total how many are there? Total 10 are there, right? The correct answer to this question is 10, right? I hope it is clear. Total how many time buckets are there? Total 10 buckets are there. So option C is the correct answer, right? So this is as per RBI guideline. As per RBI guideline, the total number of time buckets in ALM we have is how much? 10. Okay. Now I hope it is clear. This is just a fact based question. Now let's see the second one. The second question is, what is the total number of sub bucket in 1 to 30 days time bucket? You see, in a particular bucket there are sub bucket also, like in 1 to 30 day time period, how many sub bucket are there? Option A 2, option B 4, option C 6, and option D 8. Do you know this data? How many sub bucket are there within 1 to 30 days time bucket? So you know, 1 to 30 days जो होता है ये हमारा शॉर्ट टर्म टाइम बकेट है। दिस यू नो, दिस इज अ शॉर्ट टर्म टाइम बकेट, राइट? सो आपको क्या लगता है, डू यू थिंक दैट अ सिंगल 1 to 30 day बकेट इज एनफ टू ट्रैक शॉर्ट टर्म लिक्विडिटी? यस और नो? क्या आपको लगता है कि 1 से 30 दिन का जो बकेट है वो एनफ है शॉर्ट टर्म लिक्विडिटी को ट्रैक करने में? इज 1 to 30 day बकेट एनफ फॉर ट्रैकिंग द शॉर्ट टर्म लिक्विडिटी? What do you think? So basically, you know, the correct answer is, you know, the liquidity needs can change daily. So 1 to 30 day bucket is further divided into a small sub bucket. This 1 to 30 day bucket is further divided into a small sub bucket, right? But how many sub bucket do you think there are? There are 2, 4, 6 or 8. What do you think? Please type your response. Yes, obviously no is the correct answer. So how many buckets are there? So let me tell you, there are one bucket is 1 day. 1 day bucket is there, 1 day sub bucket is there, then next bucket is 2 to 7 days, the next bucket is 8 to 14 days, and the last bucket is, you know, 15 to 30 days, right? So how many are there? Please answer. Now I hope I have given you sufficient idea to tell me the correct answer. How many buckets, sub buckets are there? Please type in the chat box. So there are four sub buckets, right? So under this 1 to 30 day bucket there are 4 sub bucket. So what is the correct answer? देखिए 1 से 30 दिन का जो टाइम बकेट है ना, उसके अंदर फर्दर 4 सब बकेट होता है। जैसे कि आप यहाँ देख सकते हैं, 1 दिन का बकेट होगा, 2 to 7 डेज का होगा, 8 to 14 डेज का होगा, और 15 से 30 दिन का होगा, राइट? So how many total sub buckets are there? 4 sub buckets are there. That is the correct answer to this question is option number B, that is 4. Now let's do some numerical. I hope it is clear till now. Is it okay? Two question we have just done. Please just type clear in the chat box, right? If it is okay till now. Now friends, let's see the next question. Next question is little bit numerical and I hope you have pen paper and calculator with you. मैं उम्मीद करता हूं कि आपके पास पेन पेपर कैलकुलेटर होगा, क्योंकि अब हम लोग कुछ न्यूमेरिकल क्वेश्चन करेंगे जो कि केस स्टडी एग्जामिनेशन में बार बार आता है. आइए देखते हैं. लेट्स सी द क्वेश्चन. So the question you can see that if the interest rate fall by 25 basis point in the first time bucket, what will be the likely impact on NII? Right. Option A 20 lakh increase, option B 50 lakh increase, option C 75 lakh decrease, option D 100 lakh decrease. So क्या हो रहा है यहाँ पे कि जो हमारा पहला टाइम बकेट है ना, उसमें इंटरेस्ट रेट मान लीजिए 25 बेसिस पॉइंट से घट गया. सपोज इंटरेस्ट रेट डिक्रीज बाय 25 बेसिस पॉइंट इन द फर्स्ट टाइम बकेट. व्हाट विल हैपन ऑन एनआईआई? You know what is NII? Net interest income. I hope you know it. Right. So how does NII change? So let's see the first time bucket. आइए मैं आपको पहले डायग्राम ले चलता हूँ. डायग्राम पे ले चलता हूँ. तो ये हमारा डायग्राम है. This is our diagram. Now you can answer this question. So what is happening here in the first time bucket? What is the first time bucket here? Please see. What is the first time bucket? So this is the first time bucket. You must know how to calculate such kind of problem. Right. आपको पता होना चाहिए. Very good. वेरी गुड, इट इज क्लियर. आपको पता होना चाहिए कि कैसे इस प्रकार के प्रॉब्लम को हम सॉल्व करेंगे. यू सी द फर्स्ट टाइम बकेट. द फर्स्ट टाइम बकेट इज 1 to 30 days. राइट. नाउ कैन यू आंसर दिस क्वेश्चन? सपोज व्हाट इज हैपनिंग इन द क्वेश्चन दैट इंटरेस्ट रेट फॉल बाय 25 बेसिस पॉइंट. सो व्हाट विल बी इंपैक्ट ऑन एनआईआई? सो कैन यू टेल मी व्हाट इज द प्रेजेंट एनआईआई? अभी एनआईआई कितना है 1 to 30 डे टाइम बकेट में? व्हाट इज द प्रेजेंट एनआईआई? You know what is the meaning of NII? Net interest income. So what is the NII presently? Can you type in the chat box? Let me see whether you know NII clearly or not. अभी का NII कितना है? Suppose interest rate has not changed yet. अभी मान लीजिए interest rate नहीं change हुआ है. Then what is the current NII? I am waiting for your response. So is it positive gap or is it negative gap? What is it? Let me check your understanding. So what is your current NII? It is how much? So you can see asset is 800. Waiting for response. Just type quickly. Yes, 200. Yes, very good. Is it negative or positive? Is it negative or positive? Yes, 200 is the correct answer. What is it, negative or positive? Please answer that. Please let me know. Yes, negative. Very good, Sagar. Very good. Yes, it is negative 200. Right. That is a negative gap. Right. Because you can see asset is 800, liability is 1000. So obviously there is a negative gap. Right. So it means that since liability is larger than asset, so it is a negative gap. So negative gap means, RSL. RSL is larger than RSA. RSL means rate sensitive liability is larger than RSA. Now, what will happen? Let me ask you a question. Suppose the interest rate fall in this case. Will this situation favor the bank or hurt the bank? Type good if you think it is beneficial or type bad if you think it is harmful. Let me ask you a question here. Suppose in this case, what happened? Suppose in this case, interest rate fall, right? It is a negative gap, and suppose interest rate fall in this case. So what will happen to the, will it be beneficial for the bank? If it is beneficial, you just type good. Or will it be harmful for the bank? If it is harmful, just type bad, right? What do you think? Let me check your understanding. So negative. Okay, yes, negative. Very good. So now good or bad, what do you think? So in this case, what is happening? Interest rate has decreased and the negative gap is negative. So is it beneficial for the bank? Right. So most of you are answering bad. Right. So obviously yes, when interest rate fall, the cost of liability decrease. Right. So you are saying bad. See. Try to understand. I think you are lacking somewhere. See what is happening when interest rate will fall. Cost of liability. Right. When interest rate decrease, what will happen? The cost of liability will decrease more than the loss on asset. So this will have positive impact on NII. This will have, positive impact on NII. This will not be bad. This will be good for the bank. Right. This will not be the bad. Why I am saying so? मैं ऐसा क्यों बोल रहा हूँ? क्योंकि liability आपका ज्यादा है और liability पे interest rate के change का impact ज्यादा होगा as compared to asset. So ultimately it will have a positive impact on NII. Now, how to calculate the resulting NII? How do we calculate it? तो गैप कितने का है? गैप है 200 करोड़ का, माइनस 200 करोड़ का. हाउ मच इज द चेंज इन द रेट? चेंज इन द रेट इज हाउ मच? 200 basis point. So can you tell me what will be so one thing is clear, it has positive impact, it has no negative impact, because two negative cancel each other, the resultant is positive, right? So why I'm telling two negative? One thing is that we have negative gap. Another negative is that interest rate is also decreasing. So two negative negative become positive. This way you can remember it, right? So now in this case, what is our gap? The gap is minus 200 crore. And what is our change in rate? What is the change in rate? Change in rate is 25 BPS. What is BPS? Which means 0.25%. Now can you tell me what will be the impact of NII? What will be the change in NII? Can you tell me in the chat box? What will be the change in NII? Whether it is positive or whether it is negative? So impact on NII is simple. If you want to calculate impact on NII, how do we calculate it? We just calculate 0.25%, 0.25% of what? 200, right? 0.25% of 200, right? So what is 0.25% of 200? Please answer. So let me solve it. So this is 0.0025 multiplied by 200, and two negative are there. Why two negative are there? Because interest rate is decreasing, so minus, and gap is negative, so minus. So negative negative become positive. So if you calculate this value, how much you are getting? Are you calculating it? How much you are getting after calculation? Please let me know. If you just calculate, यदि मान लीजिए कि आप 0.25% 200 का निकालते हैं, तो आपको कितना रिजल्ट मिल रहा है, बता सकते हैं आप? सो आई थिंक यू आर गेटिंग 50 करोड़. एम आई राइट? क्या आपको भी 50 करोड़ आ रहा है आंसर? प्लीज आप टाइप करें चैट बॉक्स में, आर यू गेटिंग 50 करोड़? So this clearly shows that because of this 25 bps decrease in interest rate, right? What is the resulting happening? NII get increased by 50 crore, right? So what is the correct answer to this question? Let me show you the question. मैं आपको क्वेश्चन दिखाता हूं. देखिए आपके सामने क्या ऑप्शन है. 25 लाख NII बढ़ेगा, 50 लाख NII बढ़ेगा, 75 लाख घटेगा और 100 लाख घटेगा. The correct answer is 50 lakh increase, right? Did you get it right? Type yes. Is it clear? Is the concept clear or do you want me to repeat it? क्या ये कंसेप्ट क्लियर है या आप मुझे रिपीट करना चाहते हैं तो प्लीज आप टाइप करें. कंसेप्ट इज आस्क्ड एवरी ईयर इन द एग्जामिनेशन, राइट? सो यू शुड हैव क्लियर अंडरस्टैंडिंग ऑफ इट. इज इट क्लियर नाउ? हाउ डू वी कैलकुलेट दिस इम्पैक्ट ऑन एनआईआई? सो वन थिंग यू मस्ट रिमेंबर, आपको एक चीज याद रखना है, वो ये आपको सबसे पहले देखना है वेदर गैप इज नेगेटिव और पॉजिटिव. First thing you have to see whether gap is negative or positive, right? This is the first thing you have to see. Second thing you have to see whether the interest rate change is positive or negative, right? And then result. I hope the concept is clear now, right? Now friends, let's see the next one. The next question we have is that what is the total rate sensitive asset for the bank? So you have to calculate the total rate sensitive asset for the bank, right? So options are 6,000 crore, 6,200 crore, 6,000. Let us come back to this particular table. आइए वापस आते हैं इस टेबल पे. Can you calculate the total rate sensitive asset of the bank? So what is the total RSA of the bank? Please look at this particular table and please let me know. I hope you have a table, you have a calculator with you. I hope you have calculator with you. So what is the total rate sensitive asset for the bank? So do you think that all asset of a bank are rate sensitive? क्या आपको लगता है कि सभी एसेट जो है रेट सेंसिटिव होते हैं? डू यू थिंक दैट ऑल? टाइप यस और नो. आई एम वेटिंग फॉर योर रिस्पांस, राइट? डू यू थिंक दैट ऑल assets are rate sensitive asset? Type yes if you think or type no if you don't think so, right? Do you think that all assets of a bank are rate sensitive? The correct answer is no, right? The correct answer is no. All assets are not rate sensitive. Why? Because some assets remain unaffected by interest rate change, and we call them non-sensitive asset. Can you give me one example like cash? Cash will not get affected because of rate change, right? So cash is a kind of non-sensitive asset. They are called, they do not get affected by change in interest rate, right? Now let's look at this table, right? So can you tell me how much is the total rate sensitive asset? The question is you have to calculate the rate sensitive asset. I hope the picture is clear to you. Can you answer it? So which one is the rate sensitive asset here? So you can clearly see the last column, you can clearly see that this is a non-sensitive. That means what is the meaning of non-sensitive? That they did not get affected by change in interest rate, right? So we have to curtail, we have to remove this 300, right? So if we remove this 300, do you think that we get the total rate sensitive asset? Yes or no? What do you think? I hope I am clear to you. I'm not getting any response from your side. Please let me know, am I audible to you, and is the video clear? Is everything okay? Right, I hope everything is okay. So if you remove this 300, which is our non-sensitive asset, right, so what we get, if we just remove this 300 from our total asset, we will get rate sensitive asset, right? Okay, fine. So we have to find the rate sensitive asset. How to go about calculating rate sensitive asset? Right, it is very simple. What you have to do, you first see the total asset. Total asset is how much? 6500. From this 6500, you subtract the non-sensitive asset. Non-sensitive asset is how much? 300. So after subtraction, you get 6200. So what is the correct answer to this question? Let me show you the question first. So the correct answer to this question is option number B. Right, option number B is the correct answer. I hope it is clear. Right, let me know if it is clear. Right. Okay, very good. Very good. It is clear now. Now let's see the next question. The next question we have, that which time bucket will have a favorable impact on NII in a rising interest rate scenario? Very good conceptual question. Right. This will clear your entire concept regarding this time bucket. आपके टाइम बकेट से रिलेटेड जो भी कंसेप्ट है वो इस क्वेश्चन से क्लियर हो जाएगा. राइट. सो let's calculate it. So question is that which time bucket will have favorable impact on NII in rising interest rate scenario? So here one thing is that interest rate is rising, right? Interest rate is rising. So let me again show you the question, right? So basically options are 13458, B267, 12357, and 4568, right? So basically, let me come back to this particular table. Let me come back to this particular table, right? So this is the time bucket, and let me erase the rest part. I'm erasing the rest part, right? So this part I'm erasing. So question is, which time bucket will have favorable impact on bank? Suppose in interest rate rising scenario, that is the question. So let me number it. मैं इसका numbering कर देता हूँ. Let me number it down. So this is the first time bucket we have, right? This is the first. This is second. This is third. This is fourth. This is five. This is six. This is seven. This is eight. So question is that, first of all, let me ask you a question. Do you think that bank benefit in a rising interest rate scenario when assets are more than liability? Suppose I say asset are more than liability, right? So do you think that bank benefit in a rising, suppose asset is more than liability and interest rate is rising. Suppose interest rate is rising in such case. So do you think that bank benefit? Yes or no? Please answer my question. Suppose asset is more than liability in a particular situation, and in that case suppose interest rate is rising, will bank benefit from this situation? मान लीजिए एसेट जो है लायबिलिटी से ज्यादा है और इंटरेस्ट रेट बढ़ रहा है, तो क्या बैंक को बेनिफिट मिलेगी? यस और नो? आई एम वेटिंग फॉर योर रिस्पॉन्स. व्हाट डू यू थिंक? So when assets are more than liability, the gap is positive, right? इसको क्या बोलते हैं हम लोग? Positive gap बोलते हैं. We call it a positive gap. When asset exceed liability, we call something called positive gap, right? This is called positive gap. And in the case of positive gap, when interest rate is increasing, that means we earn more on asset as compared to liability. So it means yes, bank will be beneficial for bank, right? Again I'm repeating, when asset is more than liability, and in that case suppose interest rate is increasing, it simply means that bank is earning more on asset, right? Like a loan. So one example of asset you can take loan, and one example of liability you can take any kind of deposit. So suppose interest rate is increasing, right? So what will happen? Bank will get more interest on the loan as compared to the interest that it has to pay on liability. So ultimately it is profitable for the bank, right? Is it clear now? Please let me know. Is it clear why it is beneficial for bank when asset is greater than liability? And when asset is greater than liability, this is called positive gap. So remember, whenever gap is positive and interest rate is increasing, this is the favorable case for the bank, right? Now the question is similar. Now let's identify favorable bucket. Can you tell me in which buckets are favorable for the bank? Right? Can you tell me which buckets are favorable for the bank? So let's look at the bucket, right? Let's look at some bucket. So first of all, 1 to 30 days, right? So what about 1 to 30 days? So in this case you can see the gap. What is the gap here? The gap here you can see 800 minus 100, which is minus 200. You see 31 day to 3 months. What is the gap here? The gap here is plus 100, right? Okay, I'm again repeating. आई एम अगेन रिपीटिंग, सी व्हाट आई एम टेलिंग यू। देखिए मैं क्या बता रहा हूं आपको, गैप का मतलब समझते हैं ना। गैप, व्हाट इज द मीनिंग ऑफ गैप, राइट? गैप मींस डिफरेंस बिटवीन एसेट्स एंड लायबिलिटी। डिफरेंस बिटवीन एसेट एंड लायबिलिटी इज कॉल्ड गैप, राइट? Difference between asset and liability is called gap. So suppose we have a positive gap, like in this case. Take one case, then it will be clear. So take this particular case, like case number 2. Like you can see in this case, asset is 650 crore and liability is 550 crore. So this is the case of positive gap. How much is the gap here? 100 crore is the gap here, because the difference between asset and liability is called the gap. So we have a 100 crore gap. Now suppose in this situation interest rate is rising. Suppose I say interest rate rise by 20%. Suppose I say interest rate rise by 20%. So can you tell me, asset is 650 crore. So what is 20% of 650 crore? It is nothing but 130 crore. So asset will rise by 130 crore. And what is our liability? 550 crore. What is 20% of 550 crore? 20% of 550 crore is how much? 110 crore. So this is the increase in asset. 130 crore is the increase in asset. 110 crore is the increase in liability. So obviously asset increase is larger than liability increase, isn't it? So ultimately bank is gaining. Bank is gaining 20 crore. Right, right, Viswa, please tell me, is it clear now? So remember, whenever gap is positive and if interest rate is increasing, then it is profitable for the bank, right? So I am given you one example, like in this case, 650 crore and 550 crore, difference is 100 crore. So if suppose interest rate is increasing by 20%, so asset will increase by 130 crore, difference asset will increase by 130 crore and liability will increase by 110 crore. So ultimately bank has 20 crore profit, right? So this example, I hope it is clear now. Please type clear in the chat box if it is clear, right? So now you have to identify in which time bucket there is a positive gap. So can you tell me which time bucket is having positive gap? So let's see the clear. So what I will do, I will prepare I will prepare another table, right? I will prepare another column, right? And I will write their gap. So what is the gap in the first time bucket? The gap is minus 200. What is the gap in the second time bucket? Yes, very good. Very good. It is clear now. So what is the gap in the second time bucket? The gap is, asset minus liability 100 crore. What is the gap in the third time bucket? So 2700 minus 3150. It is how much? Minus, I think it is 3 if minus 450. Right. What is the gap in the fourth time bucket? This is minus 150. Fifth time bucket, this is minus 150. Sixth time bucket, this is plus 250. Seventh time bucket, it is 800. This is minus 200. Now, suppose interest rate is increasing. Suppose interest rate is increasing. Gap is given to you. Now, can you tell me in which time bucket which time bucket will be favorable for the bank? Just type 1, 2, 3, 4. What do you think? I'm waiting for your response. Let me check your understanding, whether you have understood this concept clearly or not. So, friends, what do you think? Which time bucket is favorable for the bank? 1, 2, 3, 4, 5, 6, 7, 8. Just wait. 7. Okay, Viswa is answering 7. So okay, beside 7, more than, is it more? Yes, 7 is correct, because 7 is the 800. Very good. 800 is positive. Beside 700, is there anyone? You see 6 also, 250, it is positive. You see 2 also, it is also positive. So 2, 6 and 7, right? These are the favorable time bucket. Is it clear now? Yes, I mean 7. In all these cases, you can see the gap is positive, right? And in such case, if interest rate rise for the bank will ultimately be profitable for the bank. Is it clear now? So what will be the correct answer? That which time bucket will have favorable impact on NII? What is the meaning of NII? NII means net interest income. NII stands for net interest income. So question is, which time bucket will have favorable impact on NII in a rising interest rate scenario? So what is the answer? 2, 267, right? So is it clear now? Please let me know the concept is clear. So if any question is asked based on it, I hope you can answer it, right? And so this is how you should go about solving such kind of problem. Please let me know. Shall we move to the next question? I hope it is clear how to see the impact of in rising interest rate, right, on NII, right? That is called net interest income. So the correct answer is 2, 6 and 7. So these are the three cases when if it is good. Now friends, let's see the next question. The next question we have, as you can see on your screen. So there is a PQR bank, right? PQR bank operate in a region that is hit by severe flood, right, leading to financial distress for the business as well as the individual. Due to this, the bank has restructured 50 crore worth of loan under RBI relief measure for natural calamity. Right. The bank also is restructured 30 crore worth of other corporate loan under normal prudential restructuring norm. So what is the total provisioning that bank must maintain for this restructured loan? Option A 3.9 crore, option B 2 crore, option C 3.75 crore, option D 4.5 crore. Right. So this question is regarding checking your understanding for the restructured loan. So first of all, answer this. Do you think that restructured loan are automatically classified as NPA? Do you think that restructured loan are automatically classified as NPA? Type yes or no. Type yes if you think that they become NPA, or type no if you think that they remain a standard asset. What do you think? Please let me know your thought in the chat box. Right. So do you think that restructured loan automatically become NPA? क्या आपको लगता है कि कोई restructured loan है तो वो automatically NPA हो जाता है? यदि आपको लगता है तो yes टाइप करें, यदि नहीं तो no टाइप करें. Just type, right, whether you think, because understanding this concept then only you can solve this question, and this has been asked in the previous year, right? So okay, so I am getting one answer, 3.75 crore. Very good, let me check. So see, the correct answer is not all restructured loan does not become NPA, because some remain a standard asset, but bank must still maintain provision against them. Now what is the provisioning basis, right? How much provisioning is required? So, how much provisioning is required for this restructured asset? Do you know the amount? So, let me tell you, this relief measure for calamity. Yes, yes, correct. This relief measure for calamity, let me tell you the percentage of it. So, this relief measure for calamity, natural calamity, the provisioning is 0.25%. This you must remember. And for normal corporate loan restructuring, the provisioning is 5%. Right. So, now can you tell me the answer? Please do the calculation. So you should know the provisioning percentage. For relief measure natural calamity, provisioning is 0.25%, and for corporate loan restructuring, provisioning is 5%. Right. So let's calculate it. So if you calculate the 0.25 percentage multiplied by 50 crore plus total provisioning we are calculating 5 percentage multiplied by 30 crore. How much is the answer? Let's see the calculation. So if we do it, so 0.25, which is 0.0025 multiplied by 50 plus 5 percentage of 30 crore, it is how much? 1.5. And how much this one? This one I think it is 0.125, right? 1.5. So what is the final answer? So what I'm getting 1.500. So just wait a minute. It will be 1.625. Am I right? 1.625. So there is a no option given. So the correct answer is 1.625. Please check 0.25 percentage of 50 crore. Is it? Are you getting 0.125? Please let me know. So I hope that the no option is correct. The correct answer should be 1.625 crore. So let me see. This is option 1.625 crore. Right. So do you think that this calculation makes sense to you? Type yes if it is clear, or type if you want me to repeat again, please tell. So for this question to answer, you need to remember the provisioning percentage. Remember, for RBI relief measure, provisioning is 0.25%, and for corporate loan restructuring, the provisioning is how much? 5%. This thing you have to keep in mind. Okay, I'm again repeating. See, provisioning a percentage must be known to you, right, to solve this question. So how much they have restructured for RBI relief measure? 50 crore. And what is 0.25% of 50 crore? It is 0.125. If you do the calculation, you will get it, right? And what is how much worth of corporate loan they have restructured? 30 crore. As you can see, 30 crore they have restructured. And what is provisioning percentage? 5%. So what is 5% of 30 crore? 5% of 30 crore is 1.5 crore, right? So you have to find the total provisioning. Question is asking you to find the total provisioning. You just add both of them. So after addition, you will get 1.625 crore. That is the final answer, right? I hope it is clear. I hope it is clear how to find the provisioning. right? What we need to do, we need to add the individual provisioning to get the final provisioning. And you need to remember this 0.25% and 5% restructuring percentage, right? Previous class I'm not getting. So I tell you the same thing, right? No. For restructuring we have not done in the previous class, right? Okay, fine. So friends, the correct answer is as per the schedule 5, right? Okay. Now let's see the next question, right? Let's see this particular question. The question is XYZ Limited, an Indian company, right, has significant foreign currency borrowing for expansion. They have significant foreign currency borrowing to fund its expansion. Due to the cost concern, the company did not hedge a substantial portion of its foreign currency exposure. See, what we are discussing right now. I want to tell you one thing, that this question, case study 5 marks question, have been asked in the last 2 examinations. Please listen to me carefully, right? The question which we are discussing, 5 marks question repeatedly asked in December BFM examination and also, and July BFM examination also. So most probably this will ask this time also. So what I am saying you, that please understand this question very clearly, very very important. Mark it 5 star. Let me explain what is happening here. See, XYZ, an Indian company, has significant foreign currency borrowing, right, for expansion. Due to cost concern, it did not hedge substantial portion of its foreign currency exposure. Recently, the Indian rupees depreciated against the US dollar, causing a sharp increase in XYZ liability in the Indian rupees term. As a result, it likely lost to earn before interest and depreciation. So what is EBID? EBID full form is interest earning before. What is full form of EBID? Earning before interest and depreciation. So what has happened? It likely lost to earning before interest and depreciation has risen from 25% to 55%. Now, ABC Bank, which has total credit exposure of 500 crore to XYZ Limited, right, initially has made incremental provisioning. Last time you asked me what is incremental provisioning, so it will be clear here. So they have made an incremental provisioning of 20 basis point, that is called 20 BPS, right? However, due to increased risk, it now need to revise its provisioning. So is it clear what is happening here? Is it clear what is happening here? So what is happening here, that Indian rupees depreciated. So let me highlight the key point. Let me highlight the key point here so that you can understand what is happening here in this particular question. First thing that happened is that Indian rupees depreciated, right? You can see Indian rupees depreciated, causing a sharp decrease is causing a sharp decrease. As a result, EBID risen from 25 to 55%, and it did not hedge. One more thing, it has not hedged a portion of the foreign currency exposure, right? ABC Bank has credit exposure of 500 crore, right? They have made an incremental provisioning of 20 basis point. So now the question is, let me show you the question. The question is, due to the depreciation of rupees, what should be the revised incremental provisioning requirement for ABC Bank on its total exposure to XYZ Bank? 20 BPS, 40 BPS, 60 BPS, or 80 BPS? So this is the question, and this question is most frequently asked, right? Yes. So let me explain. Let me ask you a few questions. So before we get into provisioning, let's quickly understand foreign currency risk. Here, we are dealing with what? We are dealing with foreign currency risk. We call FC risk. So let me ask you a question. Do you think that depreciation of rupee increase a company repayment liability on foreign currency loan? Suppose a company has taken a foreign currency loan, right? And suppose rupee depreciate. So does it increase company repayment liability? Yes or no? टाइप यस इफ यू एग्री और टाइप नो इफ यू थिंक अदरवाइज. मेरा सवाल ये है कि मान लीजिए कि रुपी डेप्रिसिएट हो रहा है, राइट? रुपया जो है डेप्रिसिएट हो रहा है, राइट? तो क्या ये डेप्रिसिएशन कंपनी की रिपेमेंट लायबिलिटी को बढ़ा देता है फॉरेन करेंसी लोन में? सपोज अ कंपनी हैज टेकन फॉरेन करेंसी लोन एंड सपोज रुपी डेप्रिसिएट, सो डज इट इंक्रीज द कंपनी रिपेमेंट लायबिलिटी? Yes or no? Please type. I am waiting for your response. Does repayment liability of company get increased? Yes or no? So see, if a company has taken a loan in US dollar, मान लीजिए कोई कंपनी है, इसने डॉलर में लोन ले लिया, और सपोज मान लीजिए कि रुपी डेप्रिसिएट हो गया, आईएनआर जो है वो डेप्रिसिएट हो गया. व्हाट विल हैपन? द अमाउंट दैट दे आउ इन यूएसडी, दैट इन आईएनआर, राइट? जितना पैसा उन्होंने इंडियन रुपीज में लोन लिया, उधार लिया, द अमाउंट दैट दे आउ इन आईएनआर विल ऑब्वियसली गो अप, राइट? Obviously the amount that they owe in INR will go up. So what do you think? Will it increase the repayment liability? Please type. I'm waiting for your response. I'm not getting any response from your side, right? So suppose a company has taken foreign currency loan like in USD, and suppose rupee has depreciated, right? So what will happen? Will it increase their repayment liability? The answer is yes, right? The answer is yes, because suppose a company has taken loan in dollar and rupee depreciate, the amount that they owe in INR will go up. That is exactly what happened with the XYZ Limited. यही तो हो रहा है हमारे XYZ Limited के साथ, राइट? इंक्रीजिंग इट फाइनेंशियल स्ट्रेस, इनका स्ट्रेस बढ़ गया है. क्यों बढ़ गया है? क्योंकि रूपी डेप्रिसिएट हो रहा है, राइट? एंड it increase the repayment liability. Now let's look at why provisioning needs to change. What is the RBI guideline? Bank assess a company ability to service debt using a ratio which we called likely loss divided by EBID ratio. This is a ratio. You must know it. This is a ratio which is used by bank to assess a company liability to service debt. Like whether company is able to service debt or not. क्या कंपनी जो है डेब्ट को सर्विस कर पाएगी? So this thing can be assessed from this ratio. What is the ratio? Likely loss upon EBID ratio, right? Please understand, this is very important concept, right? In your book, okay, I am again repeating, this is a very important concept. Please understand. हो क्या रहा है समझिए. डॉलर जो है, सपोज अ कंपनी हैज टेकन फॉरेन करेंसी लोन इन डॉलर, राइट? एंड व्हाट हैपेंड? रूपी हैज डेप्रिसिएटेड. सपोज $1 was 80 rupees then, and now $1 is suppose it is suppose 84 now, right? It has depreciated, right? So what will happen in this case? It will have, what will happen, that since it has taken loan in foreign currency, so it will have to pay more INR, right? It will, this company which is in India, it will have to pay more INR, right, to repay the loan, right? It will have to pay more INR to repay the loan, right? So the amount that they owe in INR will go up, right? So suppose $1 was suppose rupees 80 then, and now suppose $1 is just rupees 74. Let's say decreases, right? So it will have to, what will happen in this case, that they owe in INR term more, right? So that is exactly what happened in XYZ Limited, and so that is why they are exposed to the foreign currency risk. And what bank use, there is a ratio, एक रेशियो है जो कि बैंक यूज करती है ताकि वो किसी कंपनी के एबिलिटी को, डेब्ट सर्विसिंग एबिलिटी को चेक करने के लिए. टू चेक द डेब्ट सर्विसिंग एबिलिटी, बैंक यूज अ रेशियो which we call likely loss upon EBID ratio. Remember this ratio. What is the ratio? Likely loss upon EBID ratio. दिस इज एज पर आरबीआई गाइडलाइन. आरबीआई कहती है कि बैंक किसी कंपनी के पास क्षमता है या नहीं है कि वो डेब्ट सर्विस कर पाएगी. वेदर अ कंपनी is able to service the debt or not, there is a ratio that is called likely loss upon EBID ratio. If this ratio increase, यदि ये रेशियो बढ़ेगा, so default risk arise. Try to understand. यदि ये रेशियो बढ़ेगा तो डिफॉल्ट रिस्क बढ़ जाएगा. मीनिंग बैंक मस्ट इंक्रीज प्रोविजनिंग टू कवर द लॉस, right? So if so, what will happen? There is a ratio that is called likely loss upon EBID ratio. If this ratio increase, so it means the default chance is more, and since default chance is more, so provisioning must increase, right? So now let's come back to our question. So before depreciation, what was the provisioning? You see here, before depreciation से पहले, INR depreciation से पहले, what was the provisioning? 25%, right? So before depreciation, the likely loss upon EBID was 25%. So ABC Bank made a provisioning of how much? 20 BPS. You see here written, डेप्रिसिएशन से पहले इनका जो रेशियो था वो 25% का रेशियो था, और इन्होंने बीपीएस, उन्होंने जो प्रोविजनिंग किया था वो 20 बेसिस पॉइंट का प्रोविजनिंग था. व्हाट हैपेंड आफ्टर डेप्रिसिएशन? द रेशियो जंप टू 55%. यू सी this ratio, I told you na, that if INR depreciate, this ratio will jump up, right? And if this ratio jump up, what will happen? Bank have to increase the provisioning, right? So can you tell me, should bank increase the provisioning or decrease the provisioning? Tell me whether, suppose this ratio has jumped from 25% to 55%, should bank increase the provisioning or decrease the provisioning? Waiting for your response. Please let me know. So suppose this EBI, likely loss upon EBID ratio, has jumped from 25% to 55% because of currency depreciation. So should bank increase the provisioning or should bank decrease the provisioning? What do you think? So the correct answer is, since risk is higher, right? I hope my voice is audible to you, right? Yes, increase the provisioning. Very good. Increase the provisioning because risk is higher. So risk is higher, so higher provisioning. So according to the RBI guideline, right, when the likely loss EBID move from 25 to 55, the incremental provisioning should increase from 20 to 60. The correct answer is 60. This you have to remember. This you have to remember, right? The correct answer is how much? 60, right? So in your book, right, in your book you will see a table. आपके बुक में एक टेबल मिलेगा. मैं आपको रिक्वेस्ट करता हूं, यदि आपके पास बुक है, राइट, यदि आपके पास बुक है तो मैं आपको पेज नंबर बता देता हूं. लेट मी टेल यू द पेज नंबर. राइट, इन योर बुक यू विल सी द टेबल. Let me tell you the page number. Just wait a minute. I am telling you a page number, and I will add that page in this particular PDF also. मैं उस पेज को आपको इस PDF में ऐड कर दूंगा आपके रेफरेंस के लिए. Right, that that table is very important. I think I should have added it here only. So but I have not added. No issue. So let me tell you the page number. The page number is yes, page number is 688. Right, yes, very good. 688 number page. Very good. 688 number page. Right, so there is a table, likely loss upon EBID and incremental provisioning. I request you to by heart this page, by heart this table. इसमें जो है ना, is in this table you will see likely loss upon EBID, and there is incremental provisioning. So you must know, if it is between, if it is more than 50% up to 75%, the ratio becomes 60 bps, right? So this thing you must keep in your mind. I hope it is clear now. The concept is clear. You have to by heart this particular table. Very important from examination point of view. For last two examinations, they have been asking this question, right? So the correct answer is 60 bps. Now let me come to the next question. So this is a memory based question. You have to remember it. Now let's see this particular question again. So what is happening in this case? As you can see that XYZ bank had assessed its exposure to a small enterprise, that is the DEF Private Limited. So the small enterprise is what? It is DEF Private Limited, right? And which has unhedged, it has unhedged foreign currency exposure amounting to 5 crore. Since there is insufficient data to accurately assess the DEF Private Limited UFC, right? So the bank take a conservative approach. What the bank take? Bank take a conservative approach by placing it in the highest risk category. So the question is, what should be the incremental provisioning requirement for XYZ bank exposure to the DEF Private Limited? Option A, 10 BPS over and above standard asset provisioning as it is a smaller entity. 20 BPS as it fall under lowest risk category due to lack of data. Option C, 80 BPS as it is placed in highest risk category due to insufficient data. Option D, no additional provisioning required since it is a small entity. Right. So this is the question. So what is the meaning of UFC? You know the full form of UFC? Please let me know. क्या आपको UFC का full form पता है? So what is the meaning of UFC? Let me write down. UFC stand for unhedged foreign currency exposure. Unhedged foreign currency exposure. Right. So what is the meaning of UFC? Unhedged foreign currency exposure. That is the full form of UFC. Right. So, unhedged foreign currency exposure. Do you know the meaning of UFC? Do you want me to explain? Let me explain a little bit about UFC. What is UFC? Let me explain. देखिए, whenever a company borrow in foreign currency, whenever a company borrow in foreign currency, right? So their repayment liability, their repayment liability, their repayment liability depends on exchange rate, right? Their repayment liability depends on what? Exchange rate. So exchange rate determine their repayment liability. So if they don't hedge their exposure, they are at risk. If they don't, hit the meaning of hedging. I told you earlier, we have already discussed there are some hedging tool to hedge the exposure. If they don't hedge the exposure, they are at risk when the currency fluctuates. Right. So let me ask you a question. Do you think that company with UFC pose a higher risk to the bank? Do you think that a company with UFC pose a higher risk to the bank? Yes or no? Type yes if you think that it increase the risk, or type no if you think that it does not increase the risk. Have you heard my question? My question is, क्या आपको लगता है एक ऐसा कंपनी जिसके पास UFC ही है वो आपके रिस्क को, बैंक के रिस्क को बढ़ा देता है? Yes or no? Please let me know in the chat box. So do you think that a company with UFC, that is unhedged foreign currency exposure, right, increase the is a higher risk to the bank? Yes or no? I'm not getting a response. Please answer. माय क्वेश्चन इज, क्या आपको लगता है कि अनहेज्ड फॉरेन करेंसी एक्सपोजर जो है, डज इट इंक्रीज द रिस्क फॉर अ बैंक? Please let me know whether you have not understood the concept. I will again explain, but the concept should be clear, right? Unless and until you not understand the concept, there is no use of this session, right? Your concept should be clear. What is the meaning of UFC? और ये सब क्वेश्चन बार बार एग्जामिनेशन में आता है. That is what we are discussing, right? So is everything okay? Is video and audio okay? I'm not getting any response from your side. Please let me know if everything is okay. Okay, okay, fine. Everything is okay. Okay, fine. So what is my question? That's again. Let me explain again. मैं आपको फिर से समझाता हूँ. जो भी होता क्या है कि whenever a company borrow in foreign currency, their repayment liability depends on exchange rate, right? Just we have seen in the previous question. मान लीजिए suppose a company borrow in foreign currency, their repayment liability depends on exchange rate, and if they don't hedge the exchange rate, if they don't hedge their exposure, they are at risk. So my question is, do you think that a company with unhedged foreign currency exposure pose a higher risk to the bank? मान लीजिए कोई कंपनी है जिसके पास अनहेज्ड फॉरेन करेंसी एक्सपोजर है, डज इट इंक्रीज द रिस्क टू द बैंक? द करेक्ट आंसर इज यस, राइट? बिकॉज इट इज सिंपल टू अंडरस्टैंड दैट यूएफसी simply means what? Higher risk. UFC simply means higher risk because if the local currency become weak, जैसे हमने देखा है, if the rupee become weak, if the local currency become weak, the company liability increase, which may lead to default, right? I hope the concept is clear now. Now here the concept is that insufficient data. आपको यहाँ पे दिख रहा होगा, the concept is insufficient data means lack of data, right? So bank need accurate financial data to assess a borrower risk. But what if banks don't have enough information, right? So what bank do? Bank take a conservative approach. Bank क्या करती है? Conservative approach लेती है, right? So when data is insufficient, bank must assume the worst and provision at the higher rate. And what is the provisioning? What is the provisioning percentage? Can you answer now? So see, when data is insufficient, right? Two problem are there. The first problem is this UFC, unhedged foreign currency exposure, and the second problem is this insufficient data. So because of these two reasons, bank must assume the worst, right? Now can you answer the question? What should be the incremental provisioning in this case? 80 bps. Very good, very good, right? Very good. So bank is facing, as per RBI guideline, when a company UFC risk cannot be accurately assessed, bank must place it in the highest risk category and provision at the 80 bps over the standard asset provisioning rate, right? This 80 bps over the standard asset provisioning rate, right? So who got it right? Is the concept clear? Please type clear in the chat box. This is a very important question. This question highlight why bank must be extra cautious while dealing with foreign currency risk and insufficient borrower data. Two problems are there. The first problem is unhedged foreign currency exposure, and the second problem is insufficient borrower data. And because of these two problems, the provisioning should be made as much higher as possible, which is 80 bps as per the RBI guideline. Right? I hope it is clear now. Just want your response. Is it clear? Please let me know. Now, till then, I'm moving to the next question. Right? And if you want me to repeat it, I will repeat it. No issue. But main thing is your concept should be clear. Right? Now, let's see the next question that we have. The next question is on your screen, as you can see. It is about, XYZ Bank has a total of 200 crore in the gross non-provisioning gross NPA to 200 crore in gross NPA, right? And the bank has made a provisioning amounting to 150 crore to cover this NPA, right? So, what is the current PCR for the XYZ Bank, and does it meet the RBI requirement? So, can you calculate the PCR? What is the PCR? Provisioning coverage ratio. So what is the current PCR? This is the question. So what is the meaning of PCR? What is the PCR? Provisioning coverage ratio. You know the meaning of it, provisioning coverage ratio? Let me explain. So provisioning coverage ratio tells us how much of the bank bad loan are covered by provision, right? So do you think that higher PCR is good for bank stability? When I say, suppose I say higher PCR, do you think that higher PCR is good for bank financial stability or bank stability? Yes or no? Please let me know in the chat box. Do you think that higher PCR is good for bank stability? Yes or no? So PCR tells us how much of the bank bad loan are covered by provisioning. That is what PCR tells us. So you are saying no. The correct answer is yes. The correct answer is yes. Higher PCR means what? Better financial health of the bank. Because PCR tells us how much of the bank bad loan are covered by provision. Right. So higher PCR means bank is better prepared for loan default and won't suffer as much financially. Right. So higher PCR, it indicates good stability for the bank. You know what is the formula for PCR? So the formula for PCR, let me write down. So the PCR formula is quite simple. In the numerator, we write the total provision. In the numerator, we write the total provision, and in the denominator, we write the gross NPA, right? And we multiply it by 100. Now, can you do the calculation here? Now, please do the calculation and let me know. This is the formula. Total provision upon gross NPA into 100. What do you think? Please do the calculation and tell me what is the current PCR. This question regarding PCR is most frequently asked, and it must be clear to you. What is the current provisioning coverage ratio? Means, provisioning coverage ratio tells us how much of the bank bad loan, right, is the provisioning is there, right? Means are covered by the provisioning. That is what PCR tells us, right? Now 5%, great, very good. So you can see in the numerator I will write 150 crore, in the denominator I will write 200 crore, and just it will give me 75%. And what is the RBI guideline? So what is the RBI guideline? RBI say that bank has to maintain PCR of at least 70%, right? So now can you tell me what is the answer? ABCD. Waiting for your response, right? Please let me know. Yes, 75% is the correct. So what is the correct answer? ABCD. What do you think? The correct answer is option number A, obviously. Right. Option number A is the correct answer. Is it clear now? So higher PCR, it means that yes, higher PCR is very good for bank financial stability because it indicates that there is sufficient provisioning bank had made for the bad loan. And if the PCR is lower, it means bank has not made sufficient provisioning for the bank loan. I hope it is clear. Please just type clear in the chat box if this concept is clear. Now let me switch over to the next question. Since most of you are answering A, so I hope it is clear now. Now let's see the next question that we have. The next question is on your screen, as you can see. RBI mandate is 70% PCR. So ABC Bank has reported a gross NPA of 500 crore as on March 29, 2025. Right. And due to recent economic downturn, the bank decided to increase its provisioning from 280 crore to 350 crore, right, to extra PCR above the regulatory minimum. Right. The question is, after increasing its provision, what will be the ABC Bank new PCR and what should be their next step if they want to ensure compliance with future potential regulatory change? Option A, new PCR is 70% and they should maintain this level consistently. Option B, new PCR is 80% and they should consider increasing provision further to buffer against future loss. Option C, new PCR is 60% and they need to reduce their NPA. Option D, new PCR is 75% and they should focus on intellectual understanding. Very good. So what do you think? I told you what is the meaning of PCR. Higher PCR means better financial health for the bank, right? And regulatory minimum I already told you. So what is the current PCR here? Just do the calculation. So you are answering A. Okay, one answer I have got, option number A. So here you can see gross NPA is 500 crore, right? And total provision after increase is 350 crore. So you know the formula for PCR. PCR formula is provision that we have made, and in the denominator we have final provision is 350 crore, right? How much is the gross NPA? Gross NPA is a 500 crore multiplied by 100. So what is the answer? 70%, right? So does it meet the regulatory minimum? Yes, obviously. Yes, it meets the regulatory minimum, which is 70%. Yes. So, but since the bank want to stay ahead of the future regulation, so it should consider. So, can you tell me how bank can increase the PCR? Just write in the comment section how the bank. Yes, it is just minimum, the bare minimum, which is 70%. How bank can increase the PCR? Can you tell me? Is there any way to increase the PCR? So, they should strengthen provisioning beyond the 70%, right? So, yes, correct. They should increase the provisioning. If they increase the provisioning, PCR will automatically increase. and they should prepare for future potential regulatory change. It helps them prepare for the future potential regulatory change. So option A is the correct answer. A is the correct answer. Very good. Right. Now let me take you the next question. The next question you have on the screen, that it says that ABC Enterprise, it is a mid-sized manufacturing company, right? And it has taken a term loan. It has taken a term loan from the XYZ bank. Due to unexpected cash flow issue, right? They missed their interest payment on July 1st. They also have a cash credit facility with the bank, and their outstanding balance exceed the sanction limit since June 15th. Right now, you see what happened, that on June 31st, right? So again, I'm repeating the question. Please listen to me, my question carefully. That this is a manufacturing company. They have taken a term loan. They have also availed the cash credit facility. Due to unexpected, they have taken a term loan, right? And they missed their interest payment on July 1st. So interest payment was due on July 1st, and they missed it. And similarly, the cash credit facility exceeded their outstanding balance, exceeded the sanction limit since June 15. Right now, the question is, on July 31st, what will be the SMA classification of the ABC Enterprise term loan account if no payment is made still? SMA 0, SMA 1, SMA 2, or NPA? Right. So this is a good question to check your understanding about SMA, special mention account. Right. So you know what is the meaning of a special? Again, I am showing the question. So you know that the interest payment was due on July 1st, and the question is asking on July 31st. They have still not made the payment. So what will be the status of SMA classification? Right. So a special mention account, they are the loan account that shows early sign of financial distress before becoming NPA. And RBI has categorized SMA account based on how many days the payment is overdue. Right. So based on how many days the payment is overdue, RBI has categorized SMA account. So what do you think? I hope you know it very well. So you are answering option B. So you are saying all SMA 1 it is. Okay, fine. So let me tell you what is the SMA rule. Let me write down. So SMA 0, when SMA 0 happen. So SMA 0 happen when payment is overdue 1 to 30 days. SMA 1 happen when payment is overdue. I'm talking about term loan. I'm talking about term loan. For term loan, this is the criteria. SMA 1 happen when payment is overdue from 31 to 60 days. SMA 2 happen when payment is overdue from 61 to 90 days, and after 90 days it become NPA, right? So now let's apply in this case. In this case, they missed their term loan interest repayment on July 1st, right? And by July 31st, how many days it has been? Please tell me how many days it has been till July 31st. How many days it has been? It has been 31 days, right? Please calculate from July 1st to July 31. It has been 31 days. It has been 31 days. So which category does it fall? It fall in SMA 1 category, right? You can see 31 to 60 days. So correct answer is option number B, right? Is it clear now? Why it is SMA 1 category? Please, sorry friends, please let me know in the chat box. So just you have to remember this categorization, right? It fall in SMA 1 category because it was due till July 1st, and we are talking about July 31st. So almost if you count from July 1st to July 31st, there are 31 days, and 31 days fall in 31 to 60 category. It fall in SMA 1, right? Is it clear now? If you want me to explain again, I will explain. No issue, right? But the concept should be clear, right? So what we learned from this question is that SMA account are classified based on the number of day payments are overdue, right? And early intervention in SMA 0 or SMA 1 stage, right, help in prevent bank from turning loan into NPA. Now let's see the next question. On August 15, if ABC Enterprise cash credit account continue to exceed the sanction limit since June 15th, what will be its SMA classification? You see, credit card, we are talking about cash credit account, right? So cash credit account continue to exceed the sanction limit, right? Since June 15th. So what will be the SMA 0 SMA classification? So this question is asking regarding the cash credit account, right? SMA classification for cash credit account. So what do you think? So limit it exceeded on June 15 until August 15. It is still the same. So what should be the answer? So I hope you know the classification of SMA 0. So basically, let me take you a quick recap. Right. Let me tell you a quick recap. of this cash credit account. So SMA 0 if payment overdue between 1 to 30 day. SMA 1 if payment overdue between 31 to 60 day. SMA 2 if payment overdue between 61 to 90 day. And after that it become NPA for CC account, right? So let's apply this concept to our case. So you see, ABC Enterprise exceeded cash credit limit on June 15th, and by August 15th it remained overdue. So how many days are there? You see, June 15 to basically June 15 to July 15, it is the almost 30 days, and July 15 to August 15, it is almost 31 days, because you know in July there are 31 days. So almost 30 plus 31 is how much? 61 days. Total how much? 61 days are there. So it has remained overdue for 61 days. So which category does it fall? Please tell me. Is it SMA 1, SMA 0 or SMA 2? What do you think? Yes, C is the correct answer. It falls in SMA 2 category. You can see it clearly. 0, 1 to 30 days. Let me say the question. Right, remember, for 1 to 30 days, if you remain overdue for 1 to 30 day, it is SMA 0. 31 to 60 day, SMA 1. 61 to 90 day, SMA 2. And in this case, June 15 to July 15, 30 days. July 15 to August 15, 31 days. So 30 plus 31 overall is 61 days. So it has remained overdue for 61 days. So it fall under the ambit of SMA 2 category. Right answer. So you know, cash credit and overdraft account are also classified under SMA. Right. So remember the loan, you know, overdraft OD account. Similar thing happened with the OD account. You remember OD account, right? Please tell me if there is a concept clear. For term loan, the rule is different, and for cash credit the rule is different, right? I hope it is clear now. Now friends, let's see this particular question. This is a very good question. It says that you know XYZ is still limited, right? It is a borrower with an aggregate loan exposure of 80 million rupees. It defaulted on its loan repayment on August 5th, right? By when? So the lender ABC Bank now need to take necessary action as per regulatory guideline. Again, I am repeating. XYZ Limited, aggressive loan exposure of 80 million rupees. It has defaulted, right? It has defaulted on its loan repayment, right? Now the question is, by when should ABC Bank report XYZ Limited default to CRILC, that is Central Repository of Information on Large Credit? Option A, immediately after default. Option B, by the end of the month. Option C, by the close of the business on the following Friday. Or option D, only if the default continue beyond 30 days. So this is the fact-based question, right? What do you think? So do you know, say every such kind of loan which have high exposure has to be reported to CRILC. So by what period it should be reported? This question is most frequently asked. You know what is the full form of CRILC? Central Repository of Information on Large Credit. It is a system maintained by Reserve Bank of India to track large system. So let me ask you a question. Do you think that all borrower default needs to be reported to CRILC? Please tell me. Do you think that all borrower default need to be reported to CRILC, yes or no? Please answer. All borrower default need to be reported to CRILC, yes or no? Type yes if you think so, or type no if you don't think. So can do all borrower report, all borrower exposure has to be reported to CRILC? No. Yes. So how much is the exposure limit? No, no, no. The correct answer is no. Right. Only borrower with an aggregate, yes, only borrower with an aggregate loan exposure of 50 million rupees. 50 million, right? Or we can say 5 crore. So only, or 5 crore rupees. Only borrower with an aggregate loan exposure of 5 crore and more and above, they are reported to CRILC, right? Now let's apply this to our question, right? So in this question, what happened? The company defaulted on 5th August. You see, it defaulted on 5th August, right? So as per RBI guideline, so what is the correct answer? The correct answer is option number C. As per RBI guideline, right? Bank must report all such default by the close of business on the following Friday or the previous working day if Friday is holiday, right? So on the following Friday, this is the thing you have to remember, right? Above 5 crore, no, yes, 5 crore, very good, very good, 5 crore, very good, right? So what we learned from this question, you know, that this CRILC track stressed asset, this CRILC track the stressed asset, right? And it prevent loan default from spreading across bank, and bank must report default of 50 million or 5 crore and above to CRILC. And if you delay CRILC reporting, it can lead to some regulatory non-compliance and penalties. Right. Now, friends, let's try to answer it. If no viable resolution plan is implemented within 180 days, right, from the end of the review period, what additional provisioning must ABC Bank make? Right. So we are talking about the previous case only. Right. Just see the previous case. Right. In the previous case, XYZ has taken loan from ABC Bank. Right. August 5, it has defaulted. All right. And suppose if no viable RP resolution plan is implemented within 180 days from the end of the review period, what additional provision must ABC Bank make? So you know what is the meaning of review period? What is the meaning of resolution period? You know the meaning of it? If you don't know, let me explain. See, what is the meaning of review period? When a borrower account is in default, bank conduct a 30-day review period to assess the stress, right, and decide on a resolution plan. So this is a 30-day review period that bank conduct. Right. So let me ask you a question. Do you think that bank must finalize a resolution plan? Bank must finalize a resolution plan without the review period? Yes or no? Do you think that bank must finalize the resolution plan without the review period? Yes or no? So one answer I'm getting 20%. Okay. So first answer my question. So is review period necessary or banks should directly go for resolution plan? Yes, the correct answer is no. Because review period is just for assessment. The actual resolution plan must be implemented within 80 days after the review period. Right. Now let me ask you, what will happen if resolution plan is not implemented on time? So let's see what happened to the bank if it failed to implement a valuable resolution plan within 180 days. So see what is happening. Let's try to understand. So let's try to understand with a timeline. Let's see. So this is the time when suppose August 5, 5th August, right? 5th August when loan become NPA. Then our 30-day time period is there. 30-day period is there, which we call review period. Right? And after this 30-day review period, 180 days is given. 180 days is given for what? For resolution plan. And if resolution plan is not done till this time, right, then what will happen? RBI mandate that lender must increase their provision to cover potential risk. That is the question. If no resolution plan is implemented within 180 days, so lender must increase the RBI mandate. RBI says that the lender must increase the provision. So this additional provision is a safeguard to ensure that banks are financially stable in case the default version. Right. So what is the answer? The answer is 20%. Right. D is the correct answer. Is the concept clear now? Please let me know. Because in a single question we are learning many different things. Please tell me, is the concept clear? So what we learned from this question is that if no viable RP is implemented within 180 days from the end of review period, bank must make an additional provisioning of 20%. So this helped prevent excessive risk exposure in the banking system. Very good. Right. So you must know this. First 30-day review period is there given for assessment, and after 30 days, 180 days of resolution plan is pleased to be prepared. And if after 180 days no RP is prepared, then bank must make 20% additional. So that is the point, right? Now let's switch to our focus to the next question. So the next question you can see on your screen, as you can see. So friends, the question is ABC Industry Limited, right? It has defaulted on its loan. It is a manufacturing company. It has defaulted on its loan. Let me zoom a little bit, right? And an insolvency resolution and IP. You know what is the meaning of IP? IP means insolvency professional. IP, right? An insolvency professional is appointed, and the case is taken by the appropriate authority, right? So, meanwhile, Mr. Ramesh, the company promoter, planned to contest election, but allegation arise that he transferred company asset before defaulting. Employer also concerned about their unpaid wage. So this is the situation, right? So again, I'm repeating: ABC Industry Limited has defaulted on its loan. Creditor have initiated IP, right, and insolvency question. So under IBC, which of the following will oversee the insolvency resolution of ABC Industry, and who will manage the process? Option A, DRT, it is managed by company board. Option B, NCLT, managed by IIP. Option C, RBI, managed by company auditor, and option D, High Court. So under IBC, who will oversee? Who will monitor the insolvency resolution? I want everyone to answer. This is the basic question, right? Which you must know. And the same concept is in ABM unit number 25, right? The same resolution process. And in BFM also, in the unit number 28, in the last pages, the same thing have been given. So, who will oversee the insolvency resolution? So, there is something called IBC 2016, Insolvency and Bankruptcy Code 2016, right? It is an Indian legal framework. It is an Indian legal framework for resolving the financial distress. So let me ask you a question. Do you think that a company board continue managing its operation once insolvency proceeding begin? Please answer my question. Right. Do you think that company board continue managing its operation once an insolvency proceeding begin? Yes or no? Suppose company defaulted, insolvency proceeding begin. So do you think that company board continue managing its operation? Yes or no? Let me check your understanding. So one answer I'm getting A, one answer I'm getting B. So please answer my question. So suppose a company's resolution insolvency is start. So do you think that board will manage the operation? Yes, very good. No, no is the correct answer. Yes, because once insolvency proceeding begin, management is handed over to whom? Management is handed over to the IP. IP means insolvency professional. So he handle the management. Now let's discuss which authority is responsible for handling the corporate. This is the case of corporate resolution. This is the case of CIRP, Corporate Insolvency Resolution Process. This is called CIRP. And for CIRP, NCLT is there, right? And for individual and partnership firm, we have what? We have DRT. Remember the difference. For CIRP, means Corporate Insolvency Resolution Process, is always handled by NCLT, that is National Company Law Tribunal. And individual and partnership are handled by DRT, which is Debt Recovery Tribunal. So what is the correct answer here? The correct answer here is option number B, I think. Yes. Option number B is the correct answer. Right. So I hope the concept is clear. Please let me know in the chat box. Right. Remember, individual case and partnership case is handled by DRT, and company case is handled by CIRP, corporate case. I hope it is clear now. Right. Great job, everyone. This is very much important question. I hope it is clear to everyone. Right. Now let's see the next one. The next one is, what are the key consequences under IBC if ABC Industry Limited failed to resolve its insolvency within the prescribed timeline? So what are the consequences? Will be prioritized and the promoter may be barred from contesting election or imprisoned for fraudulent asset transfer. Option B, the company will give an unlimited extension to repay the debt and the promoter can continue operation. Option C, only secure creditor will be repaid and employee will have to file separate claim for unpaid wage. Option D, the company asset will be seized and all stakeholders will have equal priority in repayment. What do you think? So they, once an insolvency proceeding begin, how many days does a company get for resolution? What do you think? What is the time limit? Do you know what is the time limit for completing a CIRP? Do you know the time limit for completing a CIRP? The correct answer is the correct answer is 180 days. 180 दिन यानी it means 6 months, right? So basically employee wage. The first concept is employee wage. So employee wage, employee due for up to 24 months, they are given highest priority. So those employee whose wages are due for almost 24 months, they will be prioritized. And then we know secured creditor and worker get repaid before unsecured creditor, right? So there is a priority chain, right? First of all, employee will be paid, then after secured creditor will be paid, and then after unsecured creditors. Yes, A is the correct answer. So this was just a fact based question. There is nothing concept like this in this particular question. I hope you all know this question very good. Let's see the next one. Right, this was just concept based. Now this is a real very good question. Let's try to answer it. So, friends, the question is basically XYZ Bank is reviewing its liquidity position to ensure financial stability. During the assessment, the bank management observed something. So, there is a ratio that decline in the core deposit ratio, increasing the net loan to total deposit ratio, higher proportion of the time deposit. Right now, the question is, if the bank core deposit to the total asset ratio decrease, what does it indicate? So remember, this is a very very important topic. Suppose bank core deposit to total asset ratio decrease, what does it indicate? Option A, bank has a stronger liquidity position due to increasing core deposit. Option B, bank has a stable funding source. Bank stable funding source are reducing. increasing liquidity risk. Option C, bank is becoming more profitable. And option D, there is no impact on liquidity as core deposit do not contribute to stability. What do you think? So this is CD upon TA. This ratio is decreasing. So what does it indicate? You know what is the meaning of core deposit? So core deposit are the stable deposit. They are the kind of stable deposit, like saving account, current account. These are the core deposit. So do you think that a bank can safely lend more money if its core deposit are higher? If suppose bank core deposit are higher, do you think that bank can safely lend more money? Type yes or no. What do you think? Suppose bank core deposit is higher, so can it lend more safe money? The answer is yes, obviously, right? If core deposit is higher, it simply means that bank can safely lend more money, right? So higher core deposit means more stable funding and reducing the liquidity risk, right? Now please look at this question. Here in this question, what is happening? That core deposit to total asset ratio has decreased. So what does it indicate? So what is happening here? See, if the core deposit decrease, so CD has decreased. It simply means that bank must rely on market borrowing. So they don't have the deposit. So from where they will get the deposit? They will borrow from the market. So bank rely on market borrowing, or they will rely on volatile exposure, volatile deposit. This is where they will rely. And market borrowing is very unpredictable, and they can dry, right? So please tell me, if a bank rely more on volatile funding, does it liquidity increase or decrease? Does risk increase? Suppose bank rely on volatile fund, does liquidity risk increase? Yes or no? Please answer. Suppose bank rely on volatile funding, does liquidity risk increase? Obviously, right? Absolutely, because it simply means that if core deposit is less, means more liquidity risk. Now tell me the answer. What do you think? Is it A, is it B, is it C, or is it D? What option A is saying? That a bank has a stronger liquidity position? No, 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 no. If core deposit is lower, if this ratio decrease, it means bank don't have more deposit, so they will have to borrow from market, or they will have to depend on volatile deposit. And volatile deposit decreases the liquidity, right? So ultimately, what about option B? The bank and stable funding source are reducing. Yes, option B is the correct, right? So is the concept clear? Because this deposit question is asked most frequently. Please let me know in the chat box if this concept is clear. This core deposit to total asset ratio. And if you want me to explain it again, I will explain. Right. So this is called core deposit to total asset ratio. If this ratio decrease, bank stable funding source are reducing, increasing the liquidity risk. Right. I'm not getting any response from your side. I hope everything is okay. Right. This is the simplest question, and you must answer such question. Okay, I'm again explaining. Okay, I'm again explaining it. See what is happening here. See, try to understand. What is the meaning of core deposit? First, understand. Core deposit means a stable deposit, like saving account, like current account, like CASA you call it, current account, saving account. This is called core deposit. This is the bank most reliable source of fund. Right. Now, suppose what happened, this ratio decrease. So this ratio CD upon TA decreases. It simply means that core deposit decrease. If core deposit decrease, it means bank rely on market borrowing. They will rely on market borrowing. They will borrow from market, right? Or they will rely on volatile deposit. So those deposits which are quite volatile. So market, it will dry up. It will dry up during financial stress. Suppose some kind of financial stress is there. So this borrowing will dry up. How can bank? So obviously bank is exposed to this liquidity risk, right? Bank is exposed to this liquidity risk. If bank rely if bank rely more on volatile funding source, discussion is that CD is less, it means liquidity risk is more. Simple thing. If CD is less, liquidity risk is more. That means CD and liquidity risk are inversely proportional. So that is why if bank stable funding is right, if core deposit is less, means what? Liquidity risk is more, right? Because core deposit are like saving account and current account. If bank has less saving account, if bank have less current account, so it will have to borrow money from the market. And market is unpredictable, right? Sometimes what happen, suppose financial crisis is there, how in such case, how can bank will obtain market deposit? So the liquidity crisis will increase. So if core deposit is low, right, the liquidity crisis will increase. Now I think it is clear. I'm waiting for your response, right? So I hope it is clear now. So the correct answer is option number B. Now let's see the next question. Now, which of the following statement correctly explain the impact of rising net loan to total deposit ratio at the XYZ bank? So this is another ratio. In a stock approach of liquidity management, we have some ratios. The second ratio we have is net loan to total deposit ratio. Now this ratio is rising. This ratio is increasing. What will be the impact? Option A, it indicates that bank is lending aggressively, reducing its liquid asset and increasing the liquidity risk. Option B, a higher ratio suggests better liquidity management as loan are generating more interest income. Option C, it means bank has increased excess deposit and is not utilizing them effectively. Option D, a rising ratio imply increased stability since loan are more liquid than deposit. Very good question, right? Okay, very good. What do you think? Suppose this ratio, right, net loan to total deposit ratio is increasing. So what does it indicate? So before answering this question, let me ask you a question, right? So, so this ratio tells us how much of the bank deposit are given out as loan, right? What is the ratio telling you? You see the denominator. We have total deposit. आप डिनोमिनेटर देखिए क्या है यहाँ पे टोटल डिपॉजिट है आप नॉमिनेटर देखिए क्या है टोटल नेट लोन है इट क्लियरली shows that how much of the bank deposit, right? It shows that how much of the, so suppose this is the deposit, this is the deposit, so how much bank is giving the loan out of this deposit, right? That is what its ratio tells us, right? So do you think that higher ratio means the bank has more liquid asset? Yes or no? Do you think that if this ratio is higher, the bank has more liquid asset? What is the meaning of liquid asset? Those assets which can be easily be converted into cash are called liquid asset. So suppose I say this ratio is higher, does it mean that bank has higher liquid asset? Yes or no? Please let me check your understanding. Do you think that the bank has higher liquid asset? So this ratio is higher. It means that bank is giving more loan, right? On as compared to deposit. Yes, no is the correct answer, because if this ratio is higher, it means that bank has fewer liquid asset because they have given more loan, right? They don't have that, they have fewer liquid asset, right? Because loan is not a kind of liquid asset, right? Loan is not a kind of liquid asset. So cash is a kind of liquid asset which can or some kind of other assets are liquid. So what will happen if this ratio is rises? So higher ratio means that bank has lent most of its deposit. Suppose deposit is 500 crore. Out of this 500 crore, 490 crore bank has lent. That it means this ratio is higher. So if ratio is higher, out of 500 crore deposit, bank has lent 490 crore deposit. So leaving fewer liquid asset, right? So if too many customers withdraw their deposit, nothing what will happen. Suppose many customers come to the bank and they ask for their deposit. Please, I want my withdrawal. What will happen? The bank will face what? Liquidity crunch, isn't it? Bank will face liquidity crunch, isn't it? So now let me ask you a question. If a bank lend aggressively and reduce its liquid asset, does its liquidity risk increase? Yes or no? Suppose a bank lend aggressively and reduce its liquid asset. What happened to the liquidity risk? Does liquidity risk increase? Yes or no? See, this is a conceptual session. I am trying to clear your concept so that you think in a way which I am telling you, right? What I am asking you, I want response from everyone. My question is, suppose bank lend aggressively, right? बैंक ने बहुत ज्यादा लोन दे दिया, right? And obviously the liquid asset will get reduced. So does it liquidity risk increase? Yes, very good. It is liquidity risk obviously increase. So what is the moral of the story? The moral of the story is that more lending. Let me change the color. The moral of the story is that more lending. If you lend more, right, it means less liquidity you have. Less liquidity, it means risk is higher. Now can you answer the question? Option A, it indicates that bank is lending aggressively, reducing a liquid asset, increasing the liquidity risk. Option B, it suggests better liquidity management. Option C, it means bank has excess deposit and not utilizing them effectively. Option D, a rising ratio implies increasing stability. Now please answer. What do you think? A, B, C, D. I have given you sufficient insight to answer this question. Yes, A, very good. A is the correct answer, right? So remember, if this ratio is higher, a higher net loan to total deposit ratio means the bank is lending too much. Fewer liquid assets make the bank vulnerable to unexpected withdrawal, and bank need to balance lending and liquidity to maintain the financial stability. So, friends, I think we have done sufficient question for today. I hope today's session was useful to you. If we started with this case study, remember this case study. We started with this case study where we have discussed the 5 questions based on them. This have been asked frequently. Then we discussed some question on provisioning, and finally we have discussed some important ratios. So, was it valuable for you? I want your feedback. If it was really valuable, please let me know. And we will cover the rest portion in the upcoming lecture, right? And I tell you that the PDF of this session will be available in the Telegram group, right? The PDF of this session will be available in the Telegram group. This is our 27th live session, right? We have already done 26 session, and I request you to please go through those session, right? Those who have joined late, I want to tell them that आपको मैं बता देता हूं कि जो हमने अभी तक 26 लाइव सेशन कंडक्ट किया, दिस इज द 27th वन, राइट? सो दे आर मोस्ट वैल्यूएबल. If you want to master BFM, please go through those live session, because we have discussed question, and through question we have cleared the understanding, right? And the PDF, you must solve the question. They are most important question, right? In the last 2 months they will be very helpful, right? So friends, yes, I will try to cover the rest session also, right? So that's all for today. I will tell you the timing of the next session most frequently, right? I will update in the Telegram. So thank you for attending, right? Hope you will also join the next session. Good night.